Hello, everyone. It is Friday. It is a live show here. I'm excited about this one. We're going to talk about all the things I feel like I have conversations with my buyers about almost every single day. So we're going to get into it. And I have a super fun guest today because she is local. And so it'll be fun because we kind of speak the same language. So welcome, Jackie.
Hi, Sean. Thank you so much
Hi.
for having me. I'm
Of
excited.
course. I know it. I know. So if you guys are tuning in, I always like to ask, where are you watching from? I like to know where you guys are. It helps me kind of know where you are. So some of you guys watch from other places, which is great because we talk about some national stuff, but we'll always kind of bring it back to Arizona because that's where we are. So let us know where you're watching from. But Jackie, how are you doing? Oh, am I buffering?
Think so. A little bit.
Okay. Well,
You're
how about
back.
this? Okay. We're going to jump right into one of the things because in our title, I talked about mortgage rates, and I bet people were kind of like, dropping mortgage rates, what? You're crazy. So I want to bring this article up first and foremost because it's going to kind of hopefully explain a little bit. So this is in the Mortgage News Daily, and as you can see kind of up here, our mortgage rates have lowered. That we were at 7%, we're at 6.74% right now. Again, I'm going to be totally honest. I always am. This is if you have an extremely high credit rate. So if you have a little less, credit, is that going to be the rate when you go talk to a lender? Probably not, but it gives you some sort of a benchmark to know like this is where the mortgage rates are. But I just wanted to bring this up because this is the title. Rates are getting really close to a 4-month low. And we've been high for a long time. And that's one of the things that everybody keeps talking about is that why our market isn't moving is because our rates are high and home prices are high. I mean, that it kind of is going hand in hand right now. But what this article is saying, it says, after more than a week of consistent and meaningful improvement, mortgage rates finally showed us that they were at least capable of moving in the other direction yesterday because they did go up yesterday. But then, as I said, thankfully, that demonstration was short-lived. So they came back down today. The average lender got back to the recently typical business of offering the lowest conventional 30-year fixed rate in several months. As of today, you'd have to go back to December 9th to see anything lower. But if rates improve just a tiny bit more, you'd have to keep feeding quarters into the machine until reaching October 18th. At that point, it would take quite a bit more doing to extend the best in X months time frame, but no one's complaining. The average lender is easily back into the upper middle 6% range, with many of the more aggressive lenders actually in the mid 6% range for the top tier scenarios. That means that your credit is really high. This is a surprising turn of events given the interest rate fears being parroted by many pundits as the market considered the potential impact of tariff implementation. To be fair, fiscal policies will take much more time to make their impacts known on the economy and the interest rates. For now, the gains are courtesy of softer economic data, as expected, PCE inflation announced just today, and investor concerns over the economic impact for fiscal policy. So I always say this first and foremost, I'm not a lender. However, I work with a lot of lenders and I have a lot of buyers. So, I kind of stay on top of this, as I know you do too, Jackie. So what are you seeing?
So I'm seeing a lot of confusion actually out there. As everybody knows, the year started out really slow. We have listings that we weren't getting showings. We were at almost 4.5 months of inventory, which was, that's how the market used to be.
Mm-hmm.
But I don't think people they don't understand normal anymore. I mean, we're just really, truly kind of in a normal market at the moment. But here's what I will tell you, just in talking to lenders and talking to some of the other agents in our office this last couple days, mortgage applications, since the rates have dropped just in this last week, and it happened again. It happened like a month and a half, 2 months ago, I think beginning of December.
Mm-hmm.
I don't know if you remember, Sean, there was a period where the rates got under 6.5. Actually, it was like 6.4. And we were only there for like a week, maybe two. and mortgage applications picked up tremendously. So there's a huge pocket of buyers that are waiting.
So here, we'll get into this a little bit more later, only because I have another article that this is going to talk about.
Yeah.
But I believe this is what I'm saying. Well, first of all, our market shows us, and we've got data to prove that when we hit about 6.5%, our market starts moving. And that buyers like 6.5% in our market. That's when a lot more mortgage applications start to go. And we start to feel that demand a little bit more. But to that demand topic, people want to say, our demand is really low. I want to disagree with that just a little bit, only because I have buyers that are ready to buy. Here's the problem. They can't find a good house.
Well, and I think we're looking at two different problems, Sean, because I'm on the west side. And so I see that lower price point a lot more. I will tell you, in that $400 to $500 price point, there are a lot of listings that are just sitting. Even though they show, buyers got a lot of choices in that price point. They want it immaculate.
Yeah.
It's taking every penny they have to close on them. So they don't want any repairs. And they have a lot of choices, so they're really super picky. But even the ones that I've got a couple listings, 3 of them that I can think of right now, they're priced perfectly. In fact, I always try to be a little bit under to bring more attention.
Yeah, for sure.
And they're immaculate, and we're getting no showings on them. The higher price point, I was showing a client over in the Boulders at 1.2. We wrote an offer. There was 5 offers.
Yeah.
So it's really price point driven, but the higher end is not affected by the interest rates.
They're not affected by the interest rates, but it's interesting though. I feel like even in those price points, in the higher price points, there's a lot more inventory. I'm just seeing sellers, they're not kind of like getting the fact that they don't have a new roof. They don't have new air conditioning units. They have 3 different types of flooring in their house. Maybe they've redone their kitchen, but their bathrooms still aren't redone. And they want $1 million too.
Right.
That's what I'm seeing a lot of. And it just, buyers are like, yeah, I'm not willing to pay that.
Yeah.
So I'm just going to sit and I'm just going to wait. So I feel like the demand is there. But there's that I've said this before in other markets, kind of in this normal market, there's this push-pull, right, between the buyers and the sellers in certain price points, saying, no, we're here, we're ready to buy. You got to show us something that we want to buy.
Right. Absolutely.
Yeah.
It's very micro market right now too.
For sure.
I've in all my years of doing this, and I don't even want to say how many years I've been doing this, but I have never seen it so micro market in the Valley.
Well, and I think you can even go to your point, the micro market, like you can go, right, the state and then the big city, Phoenix, and then drill down into like, Peoria, Scottsdale, all those. And then you have to sometimes drill down into the specific neighborhoods, like the neighborhood.
I was just going to say that. Yeah.
We have such little inventory, and the inventory that we have is moving. The good inventory that we have is moving really fast.
Yeah.
Really fast. So it's really interesting. Okay, let's look at this article here. So this one's in Redfin. It says housing supply is piling up as home sellers enter the market, but buyers stay on the sidelines. So we've had new listings are up 7.4% from a year earlier, while pending sales are down 6%. Sales are slow, mostly because of high home prices and mortgage rates. So again, that mortgage rate is kind of helping, but we're not there yet. Buyers are kind of like, yeah, let's get to 6.5%. In Washington, D.C. and other places with high concentration of government workers, Redfin agents report that some buyers and sellers are changing plans due to uncertainty about their jobs. And then there's something about the Los Angeles fire. So let me just get into this other part. So it says there are 5 months of for sale supply on the market nationwide, up from 4.4 months a year earlier, and the most since early 2019. And again, I get that 2019, but you got to remember, like March 2020 and all bets were off. 2020 to 2022, 23, unprecedented years. Like they weren't normal. They're kind of, I'd look at them, I'm like, you got to throw those away. You can't compare that to anything. So this says inventory is piling up because more sellers are listing their homes while fewer buyers are waiting into the market. New listings rose 7.4% year over year during the 4 weeks ending February 9th, hitting their highest level for any comparable time period since 2022. Just after this time in 2022, mortgage rates started rising quickly, encouraging many homeowners to stay put and hold on to low rates. Now that lock-in effect is starting to ease. And I don't know about you, Jackie, do you feel like you've got any sellers that were feeling that kind of locked in effect that now are like, or buyers kind of like waiting for their interest rates to come down that are like, you know what, I'm just tired of waiting. It's time for us to buy.
Yeah. So I'm seeing a couple different scenarios. I've got one right now that's a corporate relo, and it was built in 2021. But he bought it early enough in 21. There's still enough equity for him to be doing okay. He's literally got about 80,000 equity in it, which is not bad. It's priced at $429.
Yeah.
I'm getting no showings. The house is beautiful. It's priced aggressive. It is actually that 10 corridor, which is, you go Tolleson Avondale, like just about a mile to 2 west of where this listing is, and the market's on fire. And here, nothing. It's like you said, micro market.
Yeah.
So, but
I
am seeing some people that they're tired of waiting. They're tired of waiting for the rates to come down, and they're like, because it's got to be really hard to give up a 3% to get a 7%. You're doubling your payments, and sometimes for much less house.
Right.
So, but I am seeing some people, because of life events, that they have to do it. They have to move. They're not testing the waters, those people.
Right.
But the ones that are just like, I can't wait any longer. I think this is what it is. I'm starting to see those. And that's where some of those listings are coming from. But I also think, Sean, that they're not willing to sometimes be realistic like they need to be. And that's why we've got some listings piling up.
I agree with you. I think that some sellers right now are forgetting that those times when you could get the highest price for your house, those were 2 years ago, and that we've slowly kind of started to shift into, Phoenix is in a buyer's market right now. Yeah. Overall. You've got to look at each individual market, specifically, because not every city in the Phoenix area is in a buyer's market, but Phoenix as a whole is in a buyer's market. And any of the cities that are in a seller's market are in a slight seller's market. So it's not like they've got a ton of leverage out there to say, no, my house is the best, house out there, and therefore I can command this price.
Yeah. They're still on that COVID high, and it's sometimes getting them to come back to reality is a little hard, but you do great at showing people the numbers, and the numbers are the numbers. You can't argue with that.
I laugh because it's kind of like that when you go in and you talk to a seller when you're getting their house ready to list, and you say, okay, so tell me, when did you replace have you replaced your roof? And they say, oh yeah, we replaced our roof just, really recently. I'm like, okay, great. And what about your air conditioning? Like, nope, we did the same thing. We just replaced the air conditioning. I'm like, okay, great. Can you get me the documents for that? Because buyers are going to ask for that. And then I look at the documents, and it was like 3 years ago that it was done. And I say that, and they're like, was it that long ago? Just time passes and they just forget. Right. And I get it, life moves so fast. So I feel like it's a little bit of that. It's the same thing when you go in and you talk to a seller and they're like, no, but my neighbor down the street just got X amount of dollars for their house, and I've got this, and I've got this, and I've got this. And then I look up the comps, and their house sold 5 years ago.
Right. Or at the height of COVID. Yeah, right. Absolutely.
Right. So it's interesting when when you really take a look at it, and it's like, they're not wrong that they've done the things, but it's the timing piece that matters.
Yeah, absolutely.
Okay. Where was I? Okay. So pending home sales. Oh, wait, hold on. I've done this before. I forgot to put the article back up. Put that up. So pending sales, meanwhile, fell 6%, similar to the declines we've seen since the start of the year. The typical home that sold in the period took 57 days to go under contract, the longest span since March of 2020. Yeah. Homes are just taking longer to sell.
Nobody was leaving their house in March of 2020.
Well, I was telling a few people this the other day during when COVID first hit. Yeah. I had a house. We literally got it under contract, And that's when it had just gone under contract, and then everything, shut down. And my client happened to be an attorney, and he was telling me, he's like, we've got to add this other language in the contract. This was before that other document came into effect that basically said that if it shut down, they can't cancel. We can't force a close like that. I can't remember the legal language of it.
I forgot all about that. Yes.
Yeah.
Right.
Yeah. And the buyers ended up backing out during their inspection period because they just were freaked out. And then the house kind of just sat for a little bit. And then they ended up coming back and buying the house anyway, kind of after like a week or two. And everyone's like, okay, I think I know what's happening. We still didn't, but yeah. So it was interesting. Okay. Yeah. So under contract since 2020, when the onset of the pandemic nearly ground the housing market to a halt. I remember that. Oh my gosh. I thought, is this another 2008? Sales are slow, mostly because housing costs are high, with the median monthly housing payment sitting just $46 below its all-time high. Home sale prices are up 4.3% year over year, and the weekly average mortgage rate is 6.89%, down slightly from a week earlier, but still more than double the average pre-pandemic and early pandemic rates. But more home buyers may come out of the woodwork soon. Redfin's Home Buyer Demand Index, a measure of tours and other buying services from Redfin agents, is up slightly from the 6-month low it dropped to in late January. And agents report they're seeing more house hunters. What do you think about that?
You know what? I'm so sorry, Sean, because I think I buffered, so I didn't hear the question.
That's okay. So what they were saying in the article is that they're starting to see more buyers come out of the woodwork. Do you feel like you're seeing more buyers personally?
In the last week, I'm noticing even on my listings, because you know how you can check the activities, see how many searches and how many people are saving. It's picked up tremendously just this week.
Yeah.
But it just shows you it's all interest rate driven.
It is. It's yeah. And this is our season.
Right. Well, it's our season, but it feels like a wonky season, but we haven't had a normal season since 19. Right. But I think what happens, and it happens every time, even when our interest rates dropped in December and came down, buyers were like, okay, I think I'm ready, but I'm going to wait for them to drop a little lower. And the next thing you know, we're back up over 7% again. And they're like, oh shit.
Right.
Sorry.
It's okay. Well, and that is what I've been telling people a lot when they're saying, what is going to happen with the mortgage rates? And I'm like, for this year. And I'm like, I believe we're going to see pretty stagnant mortgage rates. I think they're going to bounce a little bit. Could we get to 6.5%? I think we could, but I don't think it's going to stay there long. I think it's going to bounce right back up. Maybe it comes down and hits 6.5% a couple times this year.
Yeah.
But I don't see any big movements in the interest rate. I just don't.
Yeah. I agree with you.
I was going to bring, this is interesting. So I'm going to swap over here really quick and bring this up, because this is to our point earlier. This shows you these micro markets, kind of like this shows you the top 17 cities. And this has not happened in a while here. All these red arrows, which is telling us every one of these cities, the demand has dropped. And again, this is one of the things, and I'll pull this up on this because I can pull it up. But what I see happening in our market right now with this is that, again, we've got supply coming into the market, but we don't have as many homes going off the market. So that's where we're shifting kind of into that buyer's market. And I don't know, do you look at the Cromford report that much, Jackie?
Do I look at what?
The Cromford report?
Yeah, I do.
Yeah.
And they're fabulous.
They're so good.
Yeah. I mean, it's spot on. And a lot of times I'll use it for listing presentations because, the media, everybody hears different news, and it's like, sometimes it's really hard to get a seller to understand, like, okay, you might have heard that, but that's not exactly what's happening. And the Cromford just lets you show it.
Right. I mean,
We're super lucky
really
to have this tool here.
I agree. It's funny because I talk to other agents from other states, and they're always asking, like, how many months inventory do you have? To see if we're a buyer or seller's market. I'm like, I kind of know because I look at it, but I'm like, that's just not a measure that I use. I use something that is that is more, concrete with this Cromford market index. So, it just gives me a better gauge of the market rather than, we've got 6 months, so it's a buyer's market. We've got less than 6 months, it's a seller's market. There's just more to the story.
Right. Absolutely. And that shows it right there. And I mean, even the red arrows that you see, how fast are those arrows moving? Are they moved 1%? Or they moved 15%?
Yeah.
That
Tempe
tells
moved
a story
11.
too.
I know. Yeah.
And
So
I'm sorry I keep buffering.
No, it's okay. Cave Creek and Goodyear are the only two that are in green. And it's funny because Fountain Hills for the longest time was one of the top.
Yeah.
And Chandler has been sitting at the top here. But I mean, even at 144 with Chandler, that's not a crazy high sellers market. Understand, when we were in our crazy, crazy high sellers market, these numbers were like 400.
Yeah.
Which is just crazy to even think about. It's so insane.
I didn't know the Cromford market index went that high.
I didn't either. I remember when all that was happening and we were like, oh my gosh, it's so crazy. Okay. So I'm going to go back over. We're going to go back over to this article. Make sure we're seeing. Okay. Sorry, everybody. I'm bouncing around. Okay. So, but more home buyers may come out of the woodwork soon. Redfin. Okay, we talked about that. So it says, I've met a lot of potential sellers over the past few weeks. Listings typically pick up in March or April, which is not our season. It's funny because I talk about this a lot with people. Our season starts like January, February. And then we start seeing it, and we sell the most of our homes here between January and April.
Yep.
Sometimes into May. We sell more homes during that time period than we do the rest of the year. So it's very interesting because most people think that everybody sells more houses in the summertime, and we just don't. I mean, houses still sell in the summertime. I always tell my sellers, I'm like, look, don't keep your house off the market in the summer just because you think it's too hot. Real buyers are out still looking in the summer.
Well, out of necessity, you always. And, with the jobs that we have coming here, I mean, there's really not a bad time to list a house here.
Yeah. Ever. The big areas price point wise that I see adjusting a lot in the summertime is the ultra luxury, like 3 million plus. A lot of times they take their house off the market just because but I will tell you, in that market still, if somebody's looking, they're looking online, and if it's a good house, they will fly in for it.
Yeah. And the 55 plus too, Sean, that slows down tremendously during the summertime. Most of them, like the luxury, they're out of here.
Yeah, for sure. Yeah. All right. I wanted to share another article here. So this one talks about home price growth slowing. So we've had all this appreciation. And I just saw something the other day that said Phoenix, the overall appreciation was like 54 or 67%, something like that. Since 2020.
Since yeah,
which is just crazy. But so this article is talking about how the home price growth has actually slowed. So we'll take a look at this. Home price growth slows as mortgage rates dip to lowest level in over 2 months.
Kind of contradictory, huh?
It kind of is. I know. The U.S. median home sales price rose just 3.5% year over year during the 4 weeks ending February 2023, the smallest increase since September. And mortgage rates have declined to their lowest level in more than 2 months, dipping from 7.13% to 6.78% in the last 2 weeks alone, and upping buyers' purchasing power by thousands of dollars. Mortgage rates are coming down due to signals that the U.S. economy is slowing and heightened recession fears. In addition to bit of cost relief, another factor is working in buyers' favors. House hunters have a bit more power to negotiate on sales price in terms as supply piles up in some parts of the country. There are 4.6 months supply on the market, up from 4 months at this time last year. And the typical home is selling for roughly 2% less than its asking price, which really, in the grand scheme of things, 2% less is nothing.
No.
It's nothing. I'm going to I want to look on this and see. Sorry, this is going to take me just a second. So this is going to show, let me switch this tab here. This is the Cromford report. This is what we're talking about with month supply. So this does show you month supply. And right now we're at 4.3%, or I'm sorry, we're at 4.3 months supply. But back in January, we were 5 months supply. So, I mean, our inventory has come down, and I don't think that's from people canceling.
Mm-mm.
I think that's from home selling. I think we are still seeing home sell.
Well, they've gone up. Weren't they averaging around 25, 26, and then they went up over 3,000? But I think we still had a 300 difference this last week.
300 difference of what?
Of what came on the market and what sold.
You know, that's a good question. I don't know that I saw that number.
Yeah, it was around 300.
Yeah, I mean, we're still having that. I mean, let me get to this because I love this chart. I know Tina loves this chart. And this, I look at this sometimes to see kind of what we're kind of tracking, what other year we're tracking. And so this shows us like how many homes we have. Can you see those numbers? So we have, yeah. So I'll just tell you. So down here, what it tells you is we have 21,864 active homes on the market, and we have 8,074 under contract. And this was in the end of February. So the contract ratio is 36.9. So this right here, it shows you this is a warm market, which is kind of where we are.
Right.
Which, I mean, I would agree with. But I mean, this, again, it shows you, this is what I love. Let me just pop some other years up here just because this really helps people, I think. I mean, we're going to put those COVID years up and you're going to see crazy numbers.
Yeah.
But this is the part, right? So all this light blue, this is January. So this just shows you the ramp up every single year. It doesn't matter what year it is. Every year, this is when we ramp up in our listings and in our sales. Every single year.
Right.
It doesn't matter. And all this stuff is not adjusted seasonally. So this specific chart and this moves really fast versus the Cromford Market Index.
Right.
But I love showing this because it just really it really models kind of what a normal market looks like. So if we go back a couple years, I think right now we're tracking with like 2015.
Yeah, I think I heard that 14 or 15.
Mm-hmm. And the difference was, yeah, we're kind of right about there. The difference was that we just had more. Like, look at here's March in 2015, and we had 22,000 homes or active homes, but we had 11,000 under contract. That's the big difference.
Right.
So that's that demand piece.
And Sean, here's the thing too, because we still have a lot of new builds that are in MLS. In 2011, 2012, 13, 14, 15, 16, there were not a lot of new builds in MLS because the builders had really pulled back. And that's why our inventory was so low. I mean, for 10 years.
Go ahead.
Oh, I was just going to say, for 10 years, they were scared to death to build again.
Well, and it's funny because I was talking about that one of the last times on here. And I was saying, you know, they're giving these incentives for these builders, trying to get them, to build more houses because we're lacking in houses. And I said, they can give the builders incentives, but these builders do not forget what happened. Right. They are not going to overbuild again. They just will not.
Right.
They've got to adhere to their stock, their shareholders. Like, it's just not going to happen.
Yeah. No, absolutely not. And here's one other thing, Sean, too, that I think plays a lot with our inventory right now. And I haven't heard anybody talk about this. So there has never been a time where I have seen so many ready-built homes, spec homes in MLS. And the builders, because they're having to offer these incentives to pull everybody away from the resale and bring them in the doors, but they can't offer those buy down rates that they offer on an extended build. So the only way they're going to pull the people in, and by pulling them in, yeah, they'll have the occasional customer that is like, you know what, I'm going to go the full build because I want everything my way. But a lot of those buyers come in because they're attracted initially by those lower rates and all the incentives they're offering.
What's interesting, because I've got one buyer right now under contract on it with a new build, and then I've got another one that's looking at a new build, and both of them, the one that's under contract, he's building brand new, and they offered an incentive, and what they said to him is they said portion of this many percentage points have to be used towards closing costs. That's the incentive we're giving you. If you have leftover, you can use it as a rate buy down. But what that rate's going to be at that time, we don't know. So how much that's going to benefit you, again, we don't know. And the same thing being told to my other client looking at new build. But I told him too, I was just out looking at a lot for a client earlier today at a new build place. And I said to the sales agent in there, I said, you guys, because you have these rate buy downs, are really competing with resale right now. And he told me, he said, you know, I've got my house on the market right now as a resale, and I just want somebody to talk to the buyers that I would be willing to offer them a rate buy down.
Right.
And so sometimes the agents don't understand these rate buy downs, can't have that conversation about them, which is not a good thing. I mean, again, if you have a buyer and they're looking at a house, like, it would behoove you to ask and say, hey, look, would the seller be willing to offer concessions for my buyer that they can use towards a rate buy down?
Yeah.
You know, but they have to understand these concepts and understand how to explain it and understand how to structure that deal. And unfortunately, not everybody does.
No.
So it's very interesting, but that's what I mean, because you see all the numbers about new home construction kind of beating out resale right now as far as how many homes they're selling. And I really believe that it's because of those rate buy downs. However, yeah, go ahead.
I was just going to say, there's some buyers that I know of, and other agents I've talked to too, they literally could not buy a home unless they were going to a new build. It's their only choice. Because even if they're looking at a first time home buyer price point of say 400, 450, and they're at 7%, they can't afford it. But they can go down the street to the builder and get it at, 4.25. They can afford it. And it's the only way they can qualify. And they're forced into it. But the sad thing is that they're not always thinking about, oh, I got to put landscape in. I got to put, window treatments in. I got to do this. I got to do that. And it's like, they need to have a good agent that educates them fully on that too.
I agree with you, because that was a conversation I had with my client for the lot that I went and looked at today. And I was telling him even before that, I said, understand, you go new build, they might give you a front yard landscape package, but you have no backyard. So now you have to do all of that on your own, and you have no window coverings, and you're probably not going to have a washer dryer or a refrigerator.
Right.
They probably have packages that you can buy.
Yeah.
But you have to know that going in. On a resale, we can negotiate all that stuff.
Right.
And they're going to have window coverings that, by the way, have to stay with the house. And they're going to have backyard landscaping that's already done. Now, is it going to be exactly the way you want it? Maybe not. But you can fix that for less money than putting in all brand new landscaping.
Yeah. I don't think people realize how much landscaping costs. I mean, you can easily spend $15,000 just putting in something basic.
Right.
When you do irrigation and everything. So it's crazy.
Well, what's interesting is I was talking to one of the new home builders for my client, and we were having the same conversation. And she said to me, I don't think that people realize that we as new home, the people above us that are watching the numbers and everything, she said, they are waiting for those interest rates to drop low enough that they yank all of those incentives. So all those people that are out there going, I'm waiting for the interest rate to come down. I'm waiting for the interest rate to come down, thinking I'll just go buy a new home or a new build when the interest rates come down, and then I'll get this incentive, and then it'll be even lower. She said, as soon as those rates come down to a percentage that they're comfortable with, she's like, all of those incentives will be gone.
That's interesting. I hadn't heard that, but it makes sense.
I know.
It makes total sense.
Yeah. And those are some of the things that people forget about too. They just think, oh, well, they're always going to offer those incentives, which they don't. No. And they change them often. They'll raise the prices and then add an incentive. They move stuff around so often.
And I've seen some builders, Sean. I was out at Vistancia. I had a client out there. And so I'm like, well, what are your incentives you have right now? Do you have a buy down? They're like, we're offering $5,000 toward closing costs. I'm like, what?
Oh, wow.
5,000? That's it? And she's like, we don't need to. I'm like, wow.
I had a buyer out in Vistancia as well. We were looking at new builds, and all of them that we went to, they were all offering a pretty significant incentive. In fact, one was offering 8%.
Really?
Yeah. Yeah. But I mean, the one that I went to today for my client, they are really there. They said, the agent today said to me, we were expecting to sell 4 this month. We sold 9.
Wow.
I know. So, I mean, they have an incentive, but it's not huge.
Yeah.
You know, but they know they have to offer something.
Right. Well, they always have, but
Right.
it's just, I've just never seen it like this. But, you know, again, that I think that's leading to a lot of the numbers we have in MLS. Because if you go through it, I did this with Rick one time, and I said, pull up everything that's 2024 or newer. And it was amazing. I think when we did it was in 2023, and it was a third of the market almost at that time.
think that was probably right when all of a sudden we had this inventory spike and everyone started freaking out. And I said that to everybody. I said, time out. New home construction just dumped a bunch of houses into MLS because that kind of gravy train where they didn't really have to do that has kind of stopped.
Yeah.
So they had to come back to us real estate agents and say, please bring us your clients. Please bring us your clients.
They're like bipolar, those builders.
Oh my gosh.
One day they want to work with us, one day they're running us off, and then they're begging us to come back.
I know. I remember that though. I mean, I remember on one of Tina's charts, it was like this, and then it just shot up, and everyone was like, "Oh my gosh, what's happening?"
Yeah.
And it was like, everyone calm down. This was a dump of new construction into MLS, and that is what really spiked our mortgage rates. Or I'm sorry, our supply.
Our inventory. Yeah.
So it's an interesting thing, but it's a conversation I feel like I'm having almost on a daily basis with my buyers, especially when we're out looking for houses. And that's the big thing, right? We're looking at houses, they're okay, but again, they don't have a new roof. They don't have a new air conditioning unit. They've got 3, sometimes 4 different types of flooring, and they're still wanting a really high price.
Yeah.
And it's a hard thing because is the house livable? 100%. 100%, it's livable. Is it exactly what they want? Maybe not. And now they're looking at that high price and they're going, now I've got to do a bunch of work to it.
Right.
You know?
And they are pickier than I've ever seen. But you know what? That's okay.
I know. That's what I say. I always tell people, I'm like, you know what? Here's my reality with buyers. I'm like, if you don't love it, do not buy it.
Yeah.
I don't care what it is. It could be something I love. If you hate it, don't buy it.
Right.
You're the one living in it. For sure. So it's a crazy, crazy market out there for sure. And our supply is climbing. Our demand, again, I struggle with them saying that our demand is low. Just because I don't think that it is. I'm trying to get to the Cromford Market Index to show me. Yeah, this is interesting. So here's our Cromford Market Index right now today, showing in a buyer's market, and our supply is in the yellow and our demand is in the red. I mean,
well, I will say it's been many, many years since I saw us in a buyer market in the spring market, but
I know
again, it's micro market. So, you know,
well, it is.
Go ahead. I'm sorry.
No, go ahead.
I was just going to say, you have some buyers that hear, oh, Phoenix is in a buyer's market, and then they're wanting to offer $50,000 less on a property that's got multiple offers. And it's like, okay, that's why it's really important to drill down, like you said, to the neighborhood, because
it is
all over the place right now.
It is. And I think the thing to really understand about our market too is that when we go back in history again and take a look at some of those charts to see when we go into a buyer's market, how long do we normally stay in a buyer's market?
Not long. No. The times that we have is extremely short-lived. And if the rates stay even where they are right now, which I was a little worried that the rates were going to spike up today because I expected inflation numbers to come in higher, but they revised the previous month. And then this number came in exactly where they were hoping it would come in. So that was really good news for rates. So I think if there's some even stability at where we're at right now, I think, what are we, 6.7?
6.8. I'm sorry. No. We are 6.74.
Okay. If we stay there, I don't even think we have to get down to 6.5. We're at 6.7. We know that, but a lot of the consumers don't know that yet. Right. And if you're FHA, you can get some FHA loans at 6 1/3, 6 1/4.
To your point, right? A 15-year is 6.2.
Yeah. Yeah.
So yeah, I mean, and this is where I look at people, I'm like, when you are, when you're talking about buying a house, you've got to talk to a lender. You've got to talk to a lender so that they can really kind of look at it. And I always tell people, I'm like, you don't have to do a hard credit pull. If you give them enough information, they can give you the information that you need so that you understand, what do the interest rates look like for you? Now, are they going to stay that way for 6 months? No, because interest rates fluctuate, but at least you have an idea. And I always tell people, I'm like, you're buying the mortgage rate. I'm sorry, you're buying your mortgage payment, not your rate.
Yeah, right.
So
I knew what you meant. That's
right. It's how much are you putting down? What is the price of the house? And what is the mortgage payment going to be? Because if you're locking for a 30-year fix, that's what your fixed cost is going to be.
Yep.
And I don't get yourself all, too much house and have it be too high and go along with this, marry the house, date the rate.
Oh, I hate that.
I do too. You got to be able to afford the house. And the bonus is if you can afford the house now at 6.7% and it goes down to 6.5 or goes down to 6.2, and it will at some point, refinance and you can afford it even more.
Yeah. Sean, here's the other thing I'm seeing a lot with people still is that, and this happened with the Great Recession too. It's like people were buying houses as investments, not as homes. Mm-hmm. And then when COVID hit, people were like, oh my God, the house went up 20% in a year. And so people started doing it again, trying to buy homes as an investment and not as a home to live in. Mm-hmm. And it's like, there's been very few times in life that worked. It's like, if you buy a house and you're going to stay there for at least 6-7 years, you're always going to be okay. I don't care how much the rates go, how much the market goes up and down. If you're in there for more than 5 years, 10 years is great. You're always going to be okay. And you're always going to have equity. And it's like, people just have to kind of come back to reality, I think, a little bit.
I agree with you. And it's funny because some of the things that I'm seeing also, as far as the supply is concerned, to that point, is some of these people that went when our market was going crazy and everybody was buying short-term rentals. Mm-hmm. And so they all bought these short-term rentals. And now our short-term rental, well, not even now, for a while now, our short-term rental market, I think, has been oversaturated.
Oh, absolutely.
And so now they're not getting as many occupants and they're having more vacancies. And so they're turning it into short-term rentals, kind of off the side, or like midterm rentals. Well, they'll do 3 to 6 months. And then if they can't do that, then they'll do it, long-term rentals. And if you look for rentals, and I don't do a ton of rentals, I'll do them for really good clients of mine. Yeah. But when I'm looking at things like that, I notice it's very hard to find an unfurnished rental right now because a lot of them were short-term rentals that had vacancies and they're trying to fill it in a long-term just to break even.
Yeah.
So, I mean, and then I see some of those coming on the market. I've seen more and more people putting on the market on Top Agent Network. I don't know if you're part of that, but I'll see people put that on there.
I'm so sorry.
Yeah, that people are selling their short-term rental, and they're like, look, we've got financials, we've got everything. You can buy it fully furnished. There's bookings out already. So there's some people that are like, this maybe wasn't what it was cracked up to be.
No. It just got oversaturated. I mean, remember when the Super Bowl and everybody thought, oh, their short-term rentals were going to do so great, and half of them were sitting empty because there were so many of them.
I know.
It's just.
I had Yeah, I had some people reach out to me for a listing that I had that they wanted to, it was a tear down, but they thought they would tear it down and rebuild it because it was in such a great location to do it as a short-term rental. And then she said, if anything else comes up, let me know, that would be interesting. So I reached out to her at one point about something, and she said, you know what, we have pulled back because Phoenix is oversaturated. And this was like 3 years ago.
Yeah. I had several people that were looking at short-term rentals, and they decided not to. And there was a few I was like, I wouldn't do it.
Yeah.
I just wouldn't do it. I mean, it's way oversaturated.
Yeah.
And Sedona was even worse. I've had people actually contact me about, I'm like, I don't even work up there.
Yeah. Well, the thing that's sad about Sedona is there's so little housing up there.
Right.
That all of the people that work in Sedona, they all had to live in Cottonwood, or, when we lived in Flagstaff for a while. My husband worked in Sedona, but we had already lived in Flagstaff. I mean, it's a great place he had the most beautiful drive in the world every day to and from work. But, still, people that work there can't afford to live there.
I know, it's sad. Well, it's the same thing here, though. I mean, I'm a native from here. So, I remember even when I started in the business, Sean, average house was 80,000.
That's crazy.
I know. And it's like, I remember I did horse property, and one of my first listings was for 250,000. And I was like the big wig of the office because I had a $250,000 listing.
Oh man. I know. I've sold some horse property as well. And I mean, I sold a 20-acre parcel out in Rio Verde. It was not $200,000.
This was in New River in 1990.
Right.
Yeah. That was 250 was a high price back then.
Yeah. Well, in New River, it's out there a little bit.
Yeah.
But usually people that are, really wanting to buy horse property are okay with that.
Yeah. Oh yeah, for sure.
Yeah. Sorry if you hear that. My dog is in here with me and she's scratching herself.
Aw, no, I didn't hear it.
Yeah. Yeah. Well, it's just, the market is crazy. I think that what do you think about the rest of the year? What do you think we're going to see?
I think this is what everybody's fear is, like, and I won't talk politics, but people expect change to happen really fast sometimes. And it's like, sometimes you got to go through some really hard bumps to come out good on the other side. And I think that's kind of what's happening right now. Mm-hmm. I feel like if we just can be stable, just that we're not popping up over 7, coming down, popping back up over 7. I mean, there's a lot of people. I had somebody call me a couple of weeks ago and said, our rate's at 8. And I'm like, we're nowhere near 8. Where did you get that? You know? And there's so much misinformation. And it's like, I think if we can just stay, maybe it's 6.7 to 6.5 and stay stable, even at 6.7, stability. Mm-hmm. That's the whole key of the game right now. If we can just stay stable, I think we will have a normal market. People are like, what's normal? I think, I don't even want to guess. How's that for my answer?
Well, what's funny is that like what you say is normal. And I kind of say the same thing. I'm like, I think we're back kind of in more of a normal market. But again, because of what we just came out of, people don't remember what a normal market is.
Right.
So a house sitting for a couple months, they're like, what's happening? Why isn't it selling? And it's like, well, this is kind of normal.
Yeah, I know. I mean, we've got sellers, like I said, we've got some listings that they're not getting showings. And I'm like, you've been on the market for 5 days. Mm-hmm. We haven't even gone through a weekend yet. It's going to be okay. I mean, in the areas that one of them, it's that they're not getting offers for 45 days. It feels so abnormal now. I think it kind of throws everybody in a panic. And if things can just be stable and calm, we'll be fine. I expect this year to be better than last year. Last year, we hadn't been that slow since 1995. And I do expect we'll be better. Unless something crazy happens. But something crazy happens can make us be much better. It can make us be much worse. It's just...
I know. And that's the thing. I mean, look at what happened with the pandemic. I mean, everyone originally thought we were going to like spiral down and everything was going to come screech to a halt. And it did the absolute opposite.
Yeah.
So yeah, I know it. I think that I agree with you. I think that stability is going to be a good thing. But again, stability in the real estate market, people don't like.
No.
Because they're just like, what's happening? Why isn't it moving? What's going on? Why? And it's like, well, this is what stability feels like in this market. And
Yeah.
we just kind of prod along, and there's things that are happening, and we just kind of stay the course. And you have to know when to make a move especially with listings. You have to know when to make a move and when to just sit.
Right. Well, and that's what's so great about your show and, the Cromford Market Index. It's like if you just watch the numbers and pay attention to it, you'll know exactly what to do and when to do it.
Mm-hmm.
I mean, we never know when the bottom of the market is until we're 6 months past it. We never know we're at the height of the market until we're 6 months past it. And it's like people spend so much time with all this misinformation and trying to guess and, play the real estate game. It's not a game. It's a home.
Mm-hmm.
Look at it as a home. If you find the right home and you can afford the home, buy the home. And if you can't, don't.
Right. No, I'm with you. I don't advise anybody to buy something that they can't afford, because that is not a comfortable feeling.
Mm-mm.
But if you can afford it, I think it's a good time to buy.
Yeah.
And I know in the after play, when people are going to watch this, they're going to light me up and say, look at her. She's just telling everybody to buy because she wants a commission. It's not what I'm doing.
No.
It's that,
you're in it for the long haul.
Yeah.
I mean, it's same with me. It's like, you're not going to tell somebody to buy a house and have them mad at you 2 years from now. You're going to lead them the right way so that 2 years from now, they're going to want to buy another house, or they're going to send their family and friends. And that's how you stay in this business for, decades. So.
Right. Until I'm a dinosaur.
Look, I remember starting real estate with an MLS book, and I remember getting my first pager. I payphones, flipping through my MLS book, sticking quarters in the payphone, trying to make appointments for my clients because we couldn't find a house.
That's funny.
Yeah.
I wasn't there, but I do remember faxing all of my paperwork, starring and circling everywhere that they had to sign an initial, in hopes that they would not miss one, and inevitably they would miss one. And I was like, I got to send this paper again.
Or pressed hard. There's 3 copies.
Right. Yeah. I was there.
Yeah.
I was there for sure. Well,
and now I'm upset because I keep buffering.
Because things aren't moving fast enough. See, we keep telling everybody to just be careful, be calm. It's stability. And now, things aren't moving fast enough. So we get upset.
Yeah. That's my name for real estate this year. My goal is just for stability. And
I think it's a good one.
Yeah. I think we'll be just fine.
Good one. Yeah, I know. I mean, I do think that we're going to see some bumps, but I think when we get to the end of the year and we look back, I think we're all going to be surprised at what we just came through.
Yeah.
Because I don't think that people realize what we've been through. And it's been the last 5 years has been crazy.
Yeah. I mean, talk about extreme highs and extreme lows.
Mm-hmm.
That's exactly what we've had, And I mean, last year I don't think we can go lower than last year. And
it's funny,
we're not going to have a crash.
Yeah. Last
year, we got
year,
too much business coming here and too much tech coming here. And, it's a good to hedge on real estate in Phoenix area. Anywhere here is good as long as you're into it for the long haul.
Agreed. I mean, and your area up in North Peoria, it's changing drastically.
Yeah. There's some big deals happening with builders up by the new chip plant. Lots of land getting bought up.
Noel or Noel, I hope that was just a joke for what I said, because I really don't. But thanks for the laugh.
Yeah.
Thanks for the laugh. Oh, I get it. I whenever I tell people to buy, I get that every time. Just being honest.
Right. Oh, of course. I mean, it is what it is.
I know.
If you've been in this business for any long period of time, it's because you don't force people to buy. Mm-hmm. And I mean, who wants that? I mean, I will say I see these young kids, they watch, Selling LA and stuff like that, and they get into real estate because they think it's a quick, fast buck. It's not a quick, fast buck. And if you haven't been in the business, you don't realize how hard agents work. And there's a lot of times you work your butt off and you make nothing. And then, it's all about building referrals and having a client base I've got people that I sold their parents their first house, and then now I've got the kids. So that doesn't happen by forcing people to or misleading them. And that's the whole goal of having a show like this, is to present the numbers and show what the truth is.
Right. I get asked all the time if I watch those shows, by the way. I can't watch them. I can't. They make me crazy. I'm like, that's not reality. That's not what happens.
No. It'd be fun if it was, but it's definitely not.
I'm like, this is not how deals get done. I hate to break it to everybody.
Yeah.
We don't just like rush around and then call on the phone and go, okay, send me the contract. It's done. It just doesn't happen like that. Does not happen like that. There's some drama, but it's not like that. No. Well, Jackie, thank you so much for joining me. I appreciate it. We shall see how the rest of the year goes. I think, like we said, I think stability is a good thing to hope for this year. But I think that there's some things that we've got to get through. Hold on. We've got another. Jackie was saying in 2023, you better buy now because 2024 spring buying market was going to be a buying frenzy.
Who is that?
Noel, somebody's. I'm not. Are you saying Jackie that's on right now?
I think they're saying me.
I don't know.
The only thing I would have ever said, and that's when I think we had Barry Habib on. So let me back up a second. When we had Barry Habib, and Barry Habib was saying that he expected interest rates to get back down into the 5s in 2023. I said, first of all, I've never told somebody to buy because it's going to be a frenzy unless the rates come down. And if the rates come down, and I still will say that, if the rates come down into the 5s, I don't see it happening now because things have changed. But if rates were to come down in the 5s, I know how many buyers I have. Okay, yes. But I think I know who you are. I know how many buyers I had that never bought a house. They were bid out and they had to rent. And they're still renting to this day. So and I'm sure the same with you and a lot of agents I've talked to. So many people, if they just couldn't buy, they got beat out. So if rates were to ever come down in the 5s, half those people, unfortunately, now probably can't ever buy a home in Phoenix. Their income is not there, and it's really sad. But if rates came down into the 5s, yeah, like Barry Habib was saying, and we thought he was right. So
I know. I think a lot of people thought he was right. I remember listening to him, and I felt the same way. I thought, man, he's pretty dang smart, and he has predicted this before. But yeah, I mean, and I don't disagree with you. If rates come down to the 5s, forget it. All bets are off, and the market shifts drastically.
Yeah. But you know what? Even if it drops in the 5s, I'm still going to say the same thing too. And I'm sure I said it then. If you can afford the house, you want the house, you're going to stay in the house. Don't buy a house to flip it in 2 years. So no, it wouldn't make sense to buy a house in 2023 because you're going to have so much more in 2020. You're not going to sell it in 2024. You're going to lose money. So.
Yeah, right. For sure. Well, we can hope for stability. We can hope for a good year for everybody. If you want to buy a house, great, buy a house. If you don't, and you want to stay where you are, do that. Do what's right for you. But we're here just to help out and give some facts. If rates drop drastically, it's because of a financial crisis. I don't know about that.
It might be.
Yeah, I don't know. I don't know if I believe. I don't know. But because I'm that's not what I do for a living. So maybe if I'm wrong, I'll say I'm wrong, but I don't see a financial crisis coming, but again, I'm not a market analyst like that. So I could be wrong in that too.
I mean, we never saw COVID coming. And who would have known? I mean, we all thought when COVID came, the world was ending. And real estate too. We thought the market was going to crash, and it didn't. It went the complete opposite direction. So, I mean,
thank you. I'm glad you joined. We'll take everybody. Don't worry. Yeah, no, the market's crazy. And like you said, like we don't know when we're in the bottom until we're like 6 months out. We don't know when we're in the top until we're about 6 months out. I remember looking back at people that bought in 2007. They didn't know they were buying at the top of the market.
Right.
They had no idea, and then 2008 hit and it was like, oh my gosh, I'm stuck and, the whole deal. So, but so my husband and I, we bought our house here, the first house we bought here in Scottsdale in 2021. Sorry, 2001.
Okay.
And when the market rose, we thought to ourselves, if anybody pays us the amount of money that we could get for our house right now, they would be crazy. That would be silly. And so we just stayed and we wrote it out. Thank goodness, because the market crashed and our home price went down to basically what we bought it for, but we could afford it and it was fine. So we just stayed in our house. And then we moved in 2018 again to the house that we're in now. And we ended up selling that house for the number that we thought, if anybody paid us this much money for this house, you would be crazy. And that's what we ended up selling the house for.
Yeah.
But we waited all that time. And so we bought it lower. It went all the way up. It crashed down and we waited, again, we just waited it out and it came back up.
Right.
So again, it's just, but we had a house over our head. We had a stable mortgage payment. Our mortgage payment didn't change. So, as our incomes went up, our payment was great, so that I think is what you're saying. It's just, if you get into a house and you just stay long-term, you're going to be better off in the long run.
Yeah, absolutely. You're buying a home, and that's the big difference. It's like you're buying a home, you're not buying an investment. I remember, so I did loans back in 2005, 2003 through 2006, really. But I only handled loans for my own clients. And that was just so that I had more control of the transaction. And I knew if something was going wrong, we could deal with it and such ahead of time, because I was really tired of some of the lenders out there, like not filling me in or dragging it out to the last minute and, not telling the borrower, telling me or anybody else that there was an issue that maybe we could have figured out a solution. So I did my own clients' loans. Well, that was back when they were doing stated income. You wanted to buy a house and your friend bought a house and they bought 5 houses, and you could say, if you got to make $7,000 a week to buy this house, you just stated you bought. I refused to do those. I lost clients. I lost real estate clients because I wouldn't do their loans. Because I'm like, that's just stupid. Because we were going up so fast. I mean, you knew if you really paid attention, you knew there was something was going to pop. It it was impossible that it was going to continue. And I'll tell you, I never thought I would see prices escalate like that ever again. And it did with COVID. So,
and I think that's what scared people so much.
Yeah.
I do. I think that's what scared people so much, and rightfully so. I mean, I felt the same way, but then you have to sit back and really look at the numbers again and go, okay, what is the difference and what are we doing? And it's like, this was it was a different environment. It was a different atmosphere. Why the prices were going up was different. How the prices were going up were different. I mean, everything was different about it. It just felt the same.
Yeah.
So yeah.
And you know what? I'll say the same thing now, I guess, that I said in 2023. If people wait because they're like, oh, the rates are going to go down and then I'm going to buy. But when the rates go down, the prices go up. And that is just the way it is. And so
it's supply and demand.
That's why it's important. Just watch the rates and but don't be silly about it either. Like, okay, well, they're 6.5. I'm going to wait for them to get to 5.5. They may never get there. And then if they do the price, you kind of need to it's almost impossible to time it perfect.
You can't.
Some people get lucky.
You can't. I mean, I know when we refinanced our house, I probably waited too long to refinance our house. We still have an extremely low mortgage rate right now. But had I done it a little bit earlier, it would have been even lower. But I didn't, and I'm still okay.
Right.
So, yep. Well, Thanks everybody for joining. Jackie, thank you very much.
Thank you, Sean.
We'll do this again next Friday. Come back. Love having you. And have a great weekend, everyone.
Bye.
See ya.